Welcome students to this session. In this session, I will explain the recording of various transactions in ledger accounts under insurance policy method of depreciation. That is, at the end of this session, you will be able to understand how different ledger accounts are maintained under insurance policy method of depreciation. Now coming to practical problem, you are given that Sai Enterprise purchased a machinery on 1st January 2017 for rupees 3 lakhs and the expected life of machinery is 3 years. The expected scrap value of machinery is rupees 37,500. Now Sai Enterprise decided to have an insurance policy for a sum of rupees 2,62,500. That means Sai Enterprise is supposed to receive an amount of rupees 2,62,500 from an insurance company on maturity of the policy. The annual premium paid is rupees 82,500. Since it is given that the premium is 82,500, it is implied here that the amount of depreciation charged is also rupees 82,500. You are also informed that the accounting year ends on 31st of December. That means the accounts are closed every year on 31st of December. You are asked to prepare necessary ledger accounts under insurance policy method. Now, as discussed by me in previous video, the accounts that are to be opened in this case are asset account, that is machinery account. Since a policy is taken, a depreciation insurance policy account is opened. Depreciation fund account is opened in order to credit the amount with account with the amount of depreciation, and a depreciation account is also opened. Now coming to recording of transactions, in this case the first entry is passed on 1st January 2017, that is for purchase of an asset, that is for purchase of machinery, and the entry for the same is machinery account debit to bank account. Machinery account debit to bank account. So when the transaction is recorded in the machinery account, it is machinery account debit to bank account. Now the amount is 3 lakh. Machinery is purchased for a sum of rupees 3 lakhs. Now the next entry is passed for payment of insurance premium. The insurance premium is normally paid at the beginning of the year. So entry for payment of premium is recorded on 1st of January 2017, and the entry for the same is depreciation insurance policy account debit to bank account, and the amount of premium is 82,500. That is, for entry for payment of premium is depreciation insurance policy account debit to bank account. Now the next entry in this case is passed at the end of the year, that is on 31st of December 2017, and the entry is for providing depreciation. The entry for charging depreciation is depreciation account debit to depreciation fund account. So depreciation account is debited and depreciation fund account is credited, and the amount of depreciation in this case is equal to the amount of premium, that is 82,500. Entry for charging depreciation is depreciation account debit to depreciation fund account. So in the depreciation fund account, it is by depreciation account, and amount is 82,500. That is for charging depreciation. The next entry in the year 2017 is to transfer depreciation charge to profit and loss account. That is, depreciation account being a nominal account, at the end of the year, depreciation account is closed by transferring the balance to profit and loss account. The entry for the same is profit and loss account debit to depreciation account. So it's by profit and loss account. So these four entries will be recorded or are recorded in the first year, and with that accounts are closed for the year ending 31st of December 2017. When accounts are closed for the year ending 31st of December 2017, machinery account shows a debit balance of 3 lakhs. Shows a debit balance of 3 lakhs. Depreciation insurance policy account being a real account also shows a debit balance. Also shows a debit balance of 82,500. Depreciation account does not show any balance, account gets closed down. Depreciation fund account shows a credit balance. Of rupees 82,500. So with this, accounts get closed for the year ending 31st of December 2017. When we open accounts for the year 2018, machinery account shows a debit balance of 3 lakhs. Machinery account shows a debit balance of 3 lakhs. Insurance policy account also shows a debit balance. Both are real accounts. So real accounts normally show a debit balance. Depreciation account does not show any balance, and fund account on 1st January 2018 shows a credit balance of rupees 82,500. It's a credit balance of 82,500. Now coming to transactions to be recorded in the year 2018, first entry will be passed on 1st January 2018, that is for payment of insurance premium, and the entry for the same is depreciation insurance policy account debit to bank account. Policy account is debited with the amount of premium paid, and the amount of premium paid is 82,500. It is depreciation insurance policy account debit to bank account. The next entry for the year 2018 is passed on 31st of December 2018, and that is for providing depreciation. The entry for the same is depreciation account debit to depreciation fund account. Depreciation charged is 82,500. The entry for the same is depreciation account debit to depreciation fund account. So on 31st of December 2018, in the depreciation fund account, it will be by depreciation account. Amount is 82,500. The next entry for the year 2018 is to transfer depreciation to profit and loss account. That is, depreciation account is closed and the amount is normally debited to profit and loss account. That is 82,500. So these three entries are passed in the year 2018, and with that accounts are closed for the year ending 31st of December 2018. When accounts are closed, machinery account shows a balance of 3 lakhs. Since it's a real account, it shows a debit balance. Insurance policy account shows a debit balance of 1,65,000. Depreciation account gets closed down. Depreciation fund account shows a credit balance of 1,65,000. Now, when accounts are opened on 1st January 2019, machinery account shows a balance of 3 lakhs. Insurance policy account shows a debit balance of 1,65,000, and fund account shows a credit balance of 1,65,000. Now coming to entries recorded in the year 2019. First entry is passed for payment of premium as on 1st January 2019. The entry for the same is depreciation insurance policy account debit to bank account, and the amount of premium is 82,500. The next entry is passed on 31st of December 2019, and that is for charging depreciation. The entry for the same is depreciation account debit to depreciation fund account. Amount of depreciation is 82,500, and the same transaction, when it is recorded in the fund account, it is by depreciation account. It is 82,500. That is for charging depreciation. The next entry is recorded on 31st of December, and that is to transfer depreciation charge to profit and loss account. The entry for which is profit and loss account debit to depreciation account. This is 82,500. That is to transfer depreciation to profit and loss account. The next entry in this case is passed when the policy matures and the amount is received from the insurance company. And the entry for the same is bank account is debited and insurance policy account is credited with the amount received from the insurance company. Now in this case, the maturity value of policy is 2,62,500. That means the amount received from insurance company is 2,62,500, and the entry for the same is bank account debit to depreciation insurance policy account. Okay. So when the same is recorded in the depreciation insurance policy account, it is by bank. Amount received is 2,62,500. It is 2,62,500. Now once an amount is received from the insurance company, policy account is closed, and if there is any balance in the policy account, okay, the same is transferred to fund account. So in this case, depreciation insurance policy account is showing a balance of 15,000. So this amount is transferred to depreciation fund account by passing an entry depreciation insurance policy account debit to depreciation fund account. That is, this is the profit made on policy, and profit made on policy is credited to depreciation fund account by passing an entry depreciation insurance policy account debit to depreciation fund account. So when you record the transaction in the depreciation fund account, it is by depreciation insurance policy account. Please note, if depreciation insurance policy account shows a loss, in that case depreciation fund account is debited with the amount of loss and depreciation insurance policy account is credited with the amount of loss. Okay. The next entry is to close the depreciation fund account, and depreciation fund account is closed by transferring the balance in the fund account to asset account. So in this case, whatever balance that is appearing in the fund account is transferred to machinery account, and the entry for the same is depreciation fund account debit to machinery account. So on 31st of December 2019, depreciation fund account, the balance in the depreciation fund account is transferred to machinery account by passing an entry depreciation fund account debit to machinery account. It is depreciation fund account debit to machinery account. So in the machinery account on 31st of December 2019, it is by depreciation fund account. Amount is 2,62,500. The next entry is passed for sale of an asset as scrap. In this case, the machinery is expected to have a scrap value of 37,500, which means machinery is sold as a scrap for rupees 37,500. Hence, the entry for the same is passed. An entry for sale of an asset as scrap is bank account debit to machinery account. Whatever amount that is realized on sale of an asset is debited to bank account and the amount is credited to machinery account. So it is by bank account, that is amount realized on sale of asset as scrap. In this case, it's given as 37,500. And once the asset is sold as a scrap, then asset account, or in this case machinery account, is closed And if there is any balance in the machinery account, it is debited or credited to profit and loss account. Now in this case, the machinery account gets closed down. There is no balance in the machinery account, so it gets closed down. But sometimes machinery account may show a balance. So if it indicates a profit, then the amount is credited to profit and loss account by passing an entry machinery account debit to profit and loss account. Or machinery account may show a loss. If it indicates a loss, then the loss is debited to profit and loss account and credited to machinery account. In this case, the account tallies, so there is neither profit nor loss made on sale of machinery. We also close the depreciation account. Depreciation account gets closed down, 82,500. So with these journal entries recorded, all the 4 accounts that are open, that is machinery account, depreciation insurance policy account, depreciation fund account and depreciation account get closed down. Normally amount realized from the sale of an asset and the amount received from the insurance company is utilized by the organization for purchase of new asset. Okay. Thank you.